Ladies and gentlemen, tonight's story takes us deep into a riddle that has confounded both technologists and investors, the enigma of Songbird, also known as SGB. At first glance, Songbird looks like another digital asset in the ever-growing world of blockchain. But when you trace its creation, its design, and its price history, you'll find contradictions that simply don't add up. How can a project that appears technologically flawless experience such catastrophic value destruction? Why did progress lead to loss? This is the mystery of Songbird, a project where every success seemed to come at the expense of its own investors. The blueprint for this network was drawn in the British Virgin Islands. Songbird was not born as an ordinary blockchain. It was conceived by the Flare network as a canary chain, and a live proving ground designed to test new technology in an environment where real money, not test tokens, was at stake. This distinction is crucial. Most blockchain projects perform trials on what's called a testnet, a controlled simulation where bugs can be fixed safely because no actual value is involved. If a testnet fails, no one loses real assets. But Songbird abandoned that safety net entirely. It placed innovation directly into a live market with real liquidity, real speculation, and real consequences. In the world of blockchain, this was extraordinary. Bold to some, reckless to others. The developer's belief was absolute. A technology not proven in a real market can never be trusted. That conviction gave birth to Songbird's brilliance and its tragedy. The story truly begins on December 12, 2020, the day XRP holders had their balances recorded in what's known as a snapshot. This snapshot became the foundation for one of the most ambitious airdrops in crypto history. On September 16, 2021, the Flare team distributed approximately 15 billion SGB tokens to XRP holders worldwide, about 0.15 Songbird for every XRP they held. It was a stunning single-moment release. Normally, projects stagger such distributions across several months, sometimes even years, to prevent market chaos, but Songbird unleashed the entire supply at once. The result was instant liquidity and uncontrollable volatility. Prices surged, collapsed, and surged again, all within days. To seasoned investors, it was clear this wasn't just an airdrop, it was an experiment in behavioral economics. Was the team testing human reaction as much as blockchain performance, or was it a calculated risk that simply spiraled out of control? Underneath the surface, Songbird's design stood on three technological pillars. The first was the Flare Time Series Oracle, FTSO, a decentralized data oracle system designed to bring real-world information like cryptocurrency prices and market indicators directly onto the blockchain. Instead of relying on a single trusted data provider, Songbird invited thousands of participants to compete to provide the most accurate data. The more accurate their submissions, the greater their rewards. In theory, this democratized truth. It was a revolutionary way to eliminate centralized control. The second pillar was the state connector, a mechanism allowing Songbird to read and verify data from other blockchains and even traditional web services. Imagine a bridge between different digital worlds, a system where Songbird could see what was happening on Bitcoin, Ethereum, or even a centralized database, and then verify that information without trusting a middleman. On May 15, 2024, Songbird implemented a massive upgrade to this system, marking a new milestone for interoperability, the ability for different chains to communicate seamlessly. In any typical crypto project, such an upgrade would spark optimism and a surge in price. But for Songbird, the reaction was eerily silent. Prices didn't rise. In fact, they kept falling. How could a fundamental achievement, something that should have cemented its value, go almost entirely unrewarded by the market? The third and perhaps most ambitious pillar was F-assets, a framework that could wrap non-smart contract assets like Bitcoin, XRP, and Dogecoin into the Flare ecosystem, allowing them to participate in decentralized finance. This was a holy grail of interoperability, a way to bridge value between the old world of crypto and the new world of DeFi. If successful, it could have changed the entire industry. And yet, the market barely reacted. Adoption was slow. Liquidity pools remained shallow. It was as if Songbird had built a gateway to the future, but no one was walking through it. Then came the paradox that continues to haunt Songbird's investors. On September 29, 2021, Songbird reached its all-time high of 72 cents. It was a moment of euphoria, validation that the experiment worked. But just 4 years later, by October 17, 2025, the price had collapsed to $3, erasing 99% of its value. Normally, such a collapse signals a hack, a rug pull, or abandonment. But Songbird wasn't dead. Its network was healthy. Upgrades continued. The technology was, by all technical standards, succeeding. This made the fall even harder to explain. A project that worked was being treated as one that failed. Something fundamental was broken, not in the code, but in the way the market perceived and rewarded its progress. Experts began to uncover what many now call the value transfer paradox. Songbird, by design, was never meant to retain the ultimate rewards of its own success. As a canary network, it existed to test innovations before they were implemented on FullVer, the main network. In simple terms, when Songbird succeeded, its achievements migrated to FullVer, and so did the value. The technology's benefits flowed upward, leaving the testing chain's token holders behind. Songbird was a proving ground whose brilliance was destined to enrich another ecosystem. To the developers, this made perfect sense. It was efficient, safe, and necessary. But to investors, it was devastating. They had bought into an experiment that could never reward them fully. Every time the system worked, its value left the chain. The imbalance deepened through the token's economic model. Songbird's inflation rate started at 10%, dropped to 8% in its second year, and then to 5% in later years. Under normal circumstances, such a structure promotes scarcity, stabilizes supply, and supports gradual price growth. But the real-world outcome was the opposite. Usage remained low, token velocity increased, and most newly minted rewards were sold back into the market. The supply didn't tighten, it expanded. This created persistent downward pressure, an inflationary cycle hidden beneath a deflationary design. Then came March 4, 2025, the day confidence cracked again. A major exchange announced a temporary suspension of Songbird withdrawals due to a wallet upgrade. Under ordinary conditions, such maintenance lasts a few hours, occasionally a day. But this one dragged on. Information was vague. Traders grew anxious. Rumors spread of potential network instability or delisting. None of it was true, but panic doesn't need truth. It only needs time. By the time withdrawals resumed, the market had already punished the token. It was a small technical event with disproportionate emotional impact, a sign of how fragile investor trust had become. From the 2020 snapshot to the 2021 airdrop, from the 2024 interoperability upgrade to the 2025 exchange suspension and price crash, every chapter in Songbird's history fits together like a chain of causality. The technology evolved flawlessly, but the economic structure bled value outward. Songbird became an unintended experiment not just in blockchain design, but in the sociology of markets, a lesson in how innovation alone cannot sustain confidence when incentives are misaligned. And so the question remains, does technological progress always translate to investor gain? Songbird's story offers a sobering answer. No. Even perfect code cannot guarantee value if that value is designed to migrate elsewhere. The network continues to function, and the FullVer ecosystem continues to grow. But investors are still asking the same haunting question. Who really benefits from all this progress? Before we close, the Valuester channel invites you to take part in the investigation. If there's a stock or cryptocurrency, whether listed, unlisted, or soon to be listed, that you believe deserves a closer look, please leave your suggestions in the comments. Your insights and discoveries shape the stories we tell next. And to all of our loyal viewers who continue to watch, subscribe, like, comment, and share our content, thank you. Your support drives us to bring you deeper, sharper, and more revealing stories in the world of finance and innovation. This was Valuester. Ladies and gentlemen, tonight's story is about a mystery at the intersection of technology and finance, the paradox of Songbird, SGB. On paper, it's a marvel of blockchain engineering. In the markets, it's a tragedy. How did something designed for success end up losing almost everything? Songbird was created by the FullVer network as a canary chain, a live high-risk laboratory where real money is used to test technologies before they're deployed to FullVer's mainnet. Unlike ordinary testnets, which run on fake tokens and carry no financial risk, Songbird operates in the open market. That means every upgrade, every error, every delay affects real investors and real capital. It's bold, maybe too bold. The chain story begins on December 12th, 2020, when XRP balances were recorded for a future airdrop. On September 16, 2021, the team released roughly 15 billion SGB, about 0.15 SGB per XRP, in a single, simultaneous distribution. Normally, airdrops are phased to avoid flooding the market, but Songbird released everything at once. Liquidity exploded, so did volatility. Within days, the price swung wildly. Investors wondered whether this was a stress test or an act of overconfidence. Beneath the volatility were three pillars of innovation. 1. Flare Time Series. Oracle, FTSO, a decentralized Oracle system that brings off-chain data like market prices onto the blockchain. Thousands of data providers compete on accuracy, replacing centralized oracles with market consensus. 2. State Connector, a protocol that verifies events on other blockchains or even traditional web systems. It's a trust-minimized bridge between digital ecosystems. The upgrade on May 15, 2024 made Songbird one of the most interoperable chains in existence. Strangely, the market ignored it. Prices kept falling. Number 3, F-Assets, a framework to wrap non-smart contract assets such as Bitcoin, XRP, and Dogecoin into decentralized finance. It should have unlocked trillions in dormant liquidity, yet adoption lagged and trading activity stayed thin. At its peak on September 29, 2021, Songbird traded near 72 cents. By October 17, 2025, it was around 3 cents, a collapse of more than 99%. There was no hack, no exploit, no rug pull. The network ran smoothly, upgrades continued, and validators were active. Technically, it worked perfectly. Economically, it was bleeding out. Analysts began to notice something strange. Every time Songbird succeeded, Flare benefited more. As a canary network, Songbird's purpose was to test Flare's systems in a real economy. When those experiments succeeded, the results and the value flowed upward to Flare. Songbird was proving concepts that made another network richer. To the engineers, this was efficient. To investors, it was betrayal. The better Songbird performed, the less valuable its own token became. Its tokenomics deepened the wound. Inflation began at 10%, dropped to 8% in the second year, and stabilized at 5%. Normally, this schedule creates scarcity and price stability, but adoption lagged, staking rewards were sold off, and circulating supply kept growing. Instead of scarcity, the token faced relentless sell pressure. A system meant to self-balance instead spiraled downward. Then came March 4th, 2025. A major exchange suspended SGB withdrawals for a wallet upgrade. Under normal circumstances, such maintenance lasts a few hours. This one dragged on for days. The network was fine, but traders panicked. Whispers of delisting and internal failure spread. When withdrawals reopened, nothing was broken, except confidence. Songbird had survived yet another test, but the market no longer cared. From the 2020 snapshot to the 2021 airdrop, from the 24 upgrade to the 2025 suspension and price crash, every chapter forms a single chain. The technology was never the problem. The economic architecture was. Songbird's success was designed to leave its investors behind, an experiment in live markets where innovation and value drifted in opposite directions. And so, a question remains. Does technological progress always mean financial gain? Songbird answers with painful clarity. Not necessarily. A perfect system can still destroy value if its design sends rewards somewhere else. Songbird still runs. Flare still grows. Yet investors still ask, who really profits from this progress? Before we close, the Valuester channel invites you to participate. If there's a stock or cryptocurrency, listed, unlisted, or soon to be, that you believe deserves a deeper look, leave a comment below. Your ideas shape the next investigation. And to all of you who watch, subscribe, like, share, and comment. Thank you. Your support drives us to deliver sharper, more revealing stories at the edge of technology and finance. This was Valuester.